Okay, so right now I'm going to introduce our main speaker. So Tim Ghan, Chartered Property Casualty Underwriter, is the Assistant Chief of Product Compliance, Property and Casualty Section for the Nevada Division of Insurance. He has worked in the insurance industry since 1996 as an actuary analyst for the insurance division, then as an independent broker offering life and health and property and casualty insurance products. Then he came back to the Nevada Division of Insurance for his current role as assistant chief. Tim graduated from the University of California, Santa Cruz, where he received a Bachelor of Science in Economics and his Master of Science in Applied Economics. Tim and his wife, Beverly, reside in the mountains above Carson City, Nevada, with their sons. In his spare time, Tim enjoys hiking, golfing, fishing, and working on old cars. Now, honestly, this topic is fascinating to me, and I could pick Tim's brain for hours. And so without further ado, I would like to welcome Tim and thank you for joining us today.
Okay. Well, if everybody is still here, welcome. And Jamie, Megan, thank you for your help and the introduction. This is the Nevada Insurance Division's perspective on the insurance industry and wildfire risk. Go ahead and change screen, Jamie.
There we go.
Okay, and then hit the button one more time. Okay, so this is recent wildfire history in Nevada. And I go through a little bit of this just so you can kind of get an idea of what's taken place, which has been pretty obvious lately to a lot of people. Go ahead and hit it one more, Jamie. And one more. This is the Numbers fire, which took place on July 6, 2020, not too long ago. Hit it again. Located between Gardnerville and Topaz. Hit it again. 3 homes and 45 structures were destroyed in this fire. 18,380 acres burned. This one was supposedly caused by something being tossed out a window, by the way. The next one is the Poville fire on Peavine Mountain, June 26, 2020. It's located in northwest of Reno. This was caused by a motor vehicle. There was 1 home and 8 structures that were destroyed in this fire. 3,010 acres burned. The next one is the James fire. It took place on July 9th, 2018, north of Genoa on Jacks Valley Road out by the golf course area. It was caused by sparks from a construction equipment that lit the sagebrush on fire. There were 260 acres burned. 30 homes were threatened, but there was no structural damage. However, it came up so close to the homes, a lot of the pine trees and vegetation around the homes was burned. The next one is one of the worst in Nevada. This is the Martin fire. This took place on July 5th, 2018. It was out by Paradise Valley, northeast of Winnemucca. It was thought to be caused by fireworks or a campfire in an area that had just opened up to camping again recently. This had burned over 700 square miles or 439,000 rural acres. It was basically equivalent to a fire that was 57 miles long and 31 miles wide and visible from space at the time. The next one is a picture of downtown Reno. This is the Coughlin fire, November 18th, 2011. There were 28 homes destroyed and 15 others that were damaged in this fire. It was caused from electrical lines that were arcing because of the wind gust that night to 85 miles per hour, causing broken lines and sparks to take off and hit the ground, and again, dry vegetation and sagebrush on the ground. Thousands of individuals and their families were forced to evacuate and spend the few days down in the high schools, unfortunately, hotels and other places. And of course, the families who lost their homes had extended stays in hotels or whatever else they could find. The damage to homes and firefighting services totaled several millions of dollars. So it wasn't just the cost alone for the firefighting, but to rebuild all the homes, and it added up to quite a bit. This was also classified as a catastrophic fire. I have this shot just of Granite Mountain, the hot shots there, Memorial State Park. If you're familiar at all with the movie Only the Brave, there was 19 firefighters that perished in this. fire that succumbed to the flames. They were trapped. And one of the reasons I show it is because I have two boys that are firefighters. In fact, sent out this morning to fight the fire. And I'm trying to remember, I know Megan had mentioned it, the Slicken Fire or something like that. I can't remember the name exactly, pardon me.
Link fire.
Thank you. But they're happening all over the place, and they seem to be happening with more frequency and more severity in recent years. And you can tell just from looking out the window some days and the smoke that surrounds us. Like today's not a bad day, but yesterday was. This is a picture of my middle son, and out in the middle of nowhere, of course. And one of the things that they do is after the fire burns through, it's their job to go out and make sure that everything is put out. They're always afraid that if they leave a fire, it's just going to take off again from catching other shrubs and brushes and things like that. This is homeowners insurance. And basically the homeowner insurance policy. And what I have is just some basic constructs on how the policy comes together, things that are looked at. The first thing is the risk exposure, and that is to not only the homeowner, but to the insurer. And what it's built on is the exposure of the perils. And the perils are primarily each of the individual things that can cause a loss to a structure or that can cause damage or monetary setback, such as theft. Of course, you have wildland fire, you have fire, you have weather water storm losses, you have non-weather water storm losses, which are from other things that happen in a home. You have liability losses, you have hail, rain, wind, and so on. Then the next thing is you have the uncertainty. And this is the thing that the insurance company basically has a hard time not being able to assess it because they really don't know when it's going to happen, how it's going to happen, and of course, what type of exposure is going to cause it, and then to what degree of loss is it going to be sustained. And again, not only by the homeowner, but by the insurer as well. Then at the bottom left, I have the frequency. Frequency is just the number of occurrences that happen, you know, within a given year, within a period of time, and a lot of this is used in rate making. And of course, the next thing is the severity. So with the frequency comes the severity. How severe was the damage, was the loss to the structure, to the home, to life, so on and so forth. So these are just kind of some of the basic constructs of an insurance policy. Then we have the Nevada insurance industry. I put this in because of what's taken place recently. Nevada homeowners' rates have not been impacted by catastrophic wildfire losses observed in other Western states. We have had some companies that have filed and in their rate filings have put in Western states information and that they were basing their rates on that because, of course, we live in the same proximity. But we haven't sustained the damage. We haven't seen the frequency or the severity. In recent years, there have been some losses, but not to the degree that's been sustained in other states. Nevada wildfire is only one of, and I have 9 perils here because that's basically what seems to be changing. Realizing, of course, that there's different types of policies. Some might start off with 16, some might go up higher. It just depends. And the perils are what's built into this. So, and the type of the policy, an HO 1, 2, 3. 3 is the common one. That's the standard one that most people have. And what perils are covered within that policy and whether they're on a named basis, like theft being named or liability being named, or are they on an open basis to where they're just covered? If they're not excluded in the policy, then there should be coverage for things. And those are used in the rate making process. Nevada loss experience is required to be used in pricing of any wildfire component. We look anytime a filing comes in to ensure that the data that we are reviewing is data based on Nevada, not based on other states. We just don't feel appropriate rating Nevada off of other states' information. Wildfires may cause severe catastrophic damage geographically, and this can be because of the slope, the vegetation, the winds, and whatever you have that can drive a fire. So of course, insurers look at this to basically come up with an analysis on how the risk exposure to them can be addressed. Insurers also develop rates based on spreading the risk of loss territorially. So they section it out, they divide it off, and basically they have the constructs that go into making the policy and looking at an area and saying, hey, this area territorially belongs over here, this one belongs over here. And that's how the rating factors are developed through that. It's a lot more complicated, but I'm just giving a basis. Oops. Nevada insurance industry and related developments continued. We have historically, Nevada wildfires have not been a major cost driver of rates. And we've observed for several years multiple filings that have come in, and wildfire has been there on some, such as the Coughlin fire and others. But again, those are catastrophic losses and don't impact rates that much at this point in time. However, non-weather water losses have been the primary source of homeowner loss experience in Nevada. One of the biggest drivers of this is individuals that have maybe older appliance hoses to their dishwasher or to their laundry machine, and they will go and turn on a load of laundry or start dishes and then take off out of the home for a while to go shopping and then come back home and find that the house is all of a sudden flooded and there's severe damage in the home. So this has really been driving it over the last several years. In recent years, companies have turned to complex statistical predictive models, and this is to evaluate risk of wildfire and rate making. What they're trying to say by developing these models is that there's a predictive ability out of the model to sit and say what the rating factors ought to be for certain criteria and attributes that go into the model. Risk exposure that they might have experienced in their past. These predictive models are thoroughly analyzed and scrutinized by the division's actuarial staff to ensure acceptability prior to approval, including model documentation. Things that we require on these models is typically 3 levels. We look first of all at understanding what is the model and an explanation and detail behind it. Then we look at the input that goes into the model and how that was maybe changed or, how it was parsed out and before the model was run. And then of course we look at the output. It's again required to be based on Nevada data. And then the confidence intervals is what we see mostly. A confidence interval just gives you reliability in the data. So if we're looking at like a 95% confidence interval, which we usually receive, if selections on rating variables or perils, each one of those that I named off, their relativity factors, if they exceed the confidence interval, the high end, we typically won't allow them. We will allow anything to be on the indicated or between that and the high confidence interval, but we won't allow it to exceed without other loss ratio analysis or supporting documentation. And one other thing that's happened in the last couple of years has been the Nevada Energy has followed PG&E. They're implementing the public safety outage management. It's a procedure that, like California, is going to shut off the power when there's storms that come through that might have a high fire risk or cause high fire risk to an area. So it's something that individuals need to be prepared for. And it's something that I mentioned a little bit later on maybe having your own generator if you live in a rural area and your power is cut. Also that area, the primary area extends from the top of Kingsbury Grade to the top of Incline, from the east shore of Lake Tahoe down to the valley floor, and then from down in a little bit south of Genoa on up through Washoe. It's apparently in other parts of the state. I know Elko, I believe, and I'm not sure if it was Winnemucca or Fallon, but it is one of those. Fire catastrophe models. I mention models a lot only because of the fact that this is where insurance has been going in recent years. There are several third-party companies that have developed sophisticated fire catastrophe models. We have AIR, RMS, and others that have filed these models. The problem is we haven't approved very many of them because of one condition, and that is they didn't provide us with Nevada data. They've given us countrywide data, and it's hard for us as Nevada to allow countrywide to dictate what the rate should be here in Nevada. These models are supposed to enable insurers to make better forecasting decisions and price policies more accurately. And while they may do that to some extreme, again, it has to be based on Nevada data. These models are also used by insurers in making underwriting decisions, which could, in some cases, make purchasing insurance in some areas more difficult. And that's because they can come in, their model says this is what the rate should be, and all of a sudden people get priced out or the companies leave. And result in companies engaging in more frequent non-renewal of policies, which we've seen in Nevada very little, but there was some of it here in the past couple of years. Then some companies have reevaluated the number of policies written in high-risk fire areas and then reduced territorial exposure in those fire-prone areas where many policies were previously written. So you'd have companies that would come in and they would write maybe 500 policies in a certain area, and they want to reduce their risk based on these new model evaluations. So it has been observed, and we do look to try to work with the companies and individuals to see what the problems basically are. Insurers may use mitigation to limit or avoid loss. And this is companies are reviewing community level preparations and preventative measures taken by homeowners to identify areas that might face uncertain exposure. So if the communities are coming in and doing what they need to do as far as with mitigation, removing debris from around the homes, putting in rock barriers, back 10, 30 foot or whatever is prescribed in the plan that you can get a hold of from any fire department or any community, even from a national fire association, you need, or the community needs to basically look at this plan and enact what's in it and do the mitigation efforts, cut the limbs from under trees, move trees if they're too close to the home. If you can't move them, cut them down. You've got to get it back to where the fire is preventative. The same thing with, adding new roofing or other things like that to a structure. Fire conscious communities typically receive some measure of premium reductions, and this is in the form of discounts that insurers will provide if things are done appropriately so that the risk exposure is limited. Insurers verify homeowner structures are up to date with building codes. And this is really important because you will be asked, when, of course, you go to get a policy of insurance, if it's up to date with the building codes, and they do ask for proof. In many of those instances, some people don't have it, but what you can always do is go back to the building department and get a copy of it. But it's important that if you do these type of things that you keep it on hand. For instance, 51% of the homes in Paradise, California, built with the state's updated 2008 building code survived the 2018 Camp Fire. So that was the importance of using modern techniques or modern building code to structure homes, and then to make a home that was built later come up to that newer standard. In contrast, only 18% of the homes built before the 2008 updated building code survives. You can see the difference right there in the building code. This is why one of the reasons that insurers charge more for older homes. But if there's proof that work has been done and they've been upgraded, they will, of course, allow a lower rate to go through. Nevada Division of Insurance requires mitigation performed by the homeowner to be considered in rate making. So if you are trying to get insurance, but you feel sometimes like maybe you're just redline the area you're in or whatever, what you can do is you can show and prove to an insurer that you have performed the work. And then there should be a basis for underwriting you, hopefully acceptable. So things homeowners can do to help themselves prior to a loss. The first one is to contact your agent, discuss things that you don't understand or are unclear in your policy with your agent, or call your insurance company and have the same conversation. An insurance policy is one of the most unread books in America. And the biggest problem with it is that most people purchase the policy, take it home, and throw it in a drawer. Now, what I've seen today, we have a pretty good participation in those that have looked at their policy. Usually people don't look at their policy until something happens. Then they get the policy out, and then the questions start because it's very difficult to understand the language that's in a policy. So it's very important that individuals, once you get home, husband, wife, whoever, take your policy, go through it, and don't just look at the limits, but try to understand completely the coverage. And if you don't, take my advice, contact your agent. Ensure your policy coverage is up to date. So in other words, do you have a recent appraisal? Have you lived in the home for 10, 20 years and only talked to your insurance agent once in that period of time? Good chance that the home hasn't kept up with what current costs are. So you may be on the losing end, and of course the agent could be in some trouble too for not doing the review he should have. Has there been any recent remodeling? Have you made changes to your home as far as the heating, ventilating, and air conditioning systems, fireplaces, flooring, bath, kitchen? Have you added storage sheds on the side, which is covered under other structures? Have you done siding, roofing, things of that nature? So something that you just need to be aware of and make sure, because when you do them, the value of your home goes up. You need to inform your agent so that those things are covered also. Otherwise, you may find you're going to get shortchanged when it comes to a claim. Have any loss prevention mitigation measures been put in place? You know, as I mentioned earlier, do you have a generator, you know, to operate sprinklers or things like that? Do you have an exterior water holding tank? And these are required. Typically, I've seen them down in Ridgecrest, California, where there's a few thousand-gallon tank that's required to be on the side of a home in certain areas. Do you have other fire suppression systems? There's systems that you can buy for $400 or $500 as a homeowner to basically hook up to a hose and spray your own property to make sure, your own structure, to make sure that, you know, if there is a fire coming or you're aware of, at least you can protect the home. You could also hire private firefighting companies that will come out and perform the work as well. And to back up a little bit, I had mentioned the mitigation previously, but again, it's something that everyone needs to do. Any vehicles licensed for road use and storage currently not insured. I had one of my clients that had, he was a novelist in Carson City, an Excalibur in a garage. He had two homes next to each other, both two-story. Unfortunately, the home that burned down was the one that had the Excalibur in the garage. And I won't go into the details about it, but the problem is that he had me remove the comp and collision 2 years earlier, and I had him sign a document saying he wanted it removed because I'm like, I didn't want to be responsible for it. It's an expensive car. And anyway, the home burned down. The car was destroyed. It wasn't insured. And not only that, but then the insurance company doesn't include removal of hazardous waste. And unfortunately, that's what it's classified as because of the oil and gas that were in the vehicle that burned up at the time. Perform a checklist of all your property and store it in a fireproof safe. And I'm not talking about just going and buying a safe that says fireproof on it, but something that you are absolutely positive won't be destroyed from any type of flame or heat or anything of that nature. Put it in a vault or agent's office, just someplace to keep it safe. And I also recommend taking a camera, a movie camera, go through your entire house, open your drawers, open your storage, open up your pantry, and just film everything that you have, you know, and keep that copy as well. Will Nevada ever have a fair plan like California? I've been asked this a few times from several people. And one of the questions I can say is I really don't know. The fair plan in California is called a fair access to insurance required. It came about because back in the 1960, 68, around there, individuals couldn't purchase insurance. So the fair plan was developed, and this was basically per insurance law. And what it is it's like a conglomerate or a pool of insurers, and they all participate in the pool. They will write policies based on, of course, what policies they have. So as far as the number of policies, so, you know, might have one with 100, you might have one with 100,000. The basis is, you know, what is your proportion to everyone else? And everybody shares in the pool's premiums and they share in the losses equally. Dwelling and contents are what's provided in the typical fair plan policy. It's comparable to what's called, well, it'd be like an HO1 or HO2, which doesn't provide very much, as you'll see. But we have fire, lightning, smoke, internal explosion, extended coverage, which is optional, and vandalism and malicious mischief, which is optional. So it doesn't cover a whole lot as compared to a normal, as I say, when I say ISO HO3 policy, insurance policy, that's an insurance services office policy. And what that is the standard homeowners policy that's written to most homeowners that is the minimum requirement for a mortgage lender. And a majority of individuals have those types of policies. When you're looking at this policy, this is on a named peril basis. So each one of these is a named peril. When you get to the HO3, it has what's called an open peril basis, which includes a lot more of the perils, and as far as with, you know, theft, liability, and so on. So the rate review process conducted by the division, we have homeowners insurance rate review, which involves a rate data summary. This is basically just what changes is the insurance company going to be proposing. It will have increases, decreases, rule changes, and of course, if there's policy changes. We have what's called a rate disruption. The rate disruption basically gives us an idea of how the rate is going to impact individuals. We get an overall disruption at 5% increments and also including zero. out to whatever the percentage is that rates are going to be changed. We also have in this the largest percentage increase and the largest percentage or largest dollar increase. And what we do is we look at the attributes. In other words, what's putting the rate as far as, or not putting, but what's the rate development showing as far as what perils or where are these changes coming from? Are they coming from credit scoring attributes? Are they coming from tiering attributes? Are they coming from rate class change attributes? So it gives us an idea so that we can go through a filing and review it and make a determination. Profitability is the other thing. We look back 5 years. This includes the earned premium a company has made. It includes their losses and their anticipated loss development. And then it also includes their underwriting expenses. And it gives us a bottom line of here is on an annual basis and on a 5-year look back, how has the company been doing profitability wise? And typically these come to, lately we've been asking for them even up to the last month or two. Model documentation. This is what I had mentioned earlier, the 3 levels that we look at. Whenever we get a model that comes in, we have a section, they have to go in and provide the information. Credit scoring statement. This is the credit, and this isn't so much the credit that you get when you get your FICO score and things like that from a credit reporting agency, but it's the risk exposure that you have based on that, which has been provided by a credit scoring company. And one of the things that we do, and of course we will look at the tiering levels involved in this model. We will look at the attributes as far as what is the breakdown and the credit scoring criteria that's used within a certain model. And then also one of the criteria we also enforce is making sure when we look at the overall credit distribution, so the policies that are in force with a company give us a breakdown on how many are in each one of the different tiering levels. One of the things we're trying to ensure is that those individuals that are no hit and no score are placed within the 50th percentile. The notice explaining premium increases is a document that goes out at renewal to all insureds and explains why your premium is changing. It could have been because you had a loss in the past year and we require that they explain with each type of loss how much your rate will potentially be increasing because of that, so you have an idea. We have other exhibits that are given to us, and these are typically like the rate exhibits. So they'll show us on a side-by-side basis, here's their current rating, here's their changed rating, so that we can see what's being proposed. And other information that just provides an overall analysis of the rate input, maybe some rule changes or things like that, those type of exhibits. Then we have indications. The indications are developed based on the written premium that they have. It can include the earned premium and the losses that they've incurred over a certain period of time. They will put other expenses in. They will include such things as excessive losses where they have a cap on them, maybe at 100,000, 150, and then also catastrophic losses. They will put in their expenses, and then they will run credibility on the scoring factors so that they can come out with an indication of, with the credibility, here's, if it's say 10%, the overall rate, they might pick 10%, they might pick 5%. It just depends on how comfortable they feel with it. And then the underwriting manual primarily discusses to the insurance company how they want to pick and choose their business as far as who they want to underwrite, who's going to be rated at certain levels based on past claims, credit scoring, tiering levels, and so on and so forth. The property casualty section, we have a staff of 4 actuarial analysts. We have 1 management analyst, and primarily the actuarial analysts do the review of the forms and then also the rates and the rules of the filings that come in. The 1 management analyst is mostly forms. We have 1 lead actuary. He's a fellow of the Society of Actuaries, and that's Gennady Stolyaroff II. We depend on Gennady for a lot of things that are more complex, go a little bit higher level, and we need his evaluation and his understanding so that we can basically provide information on each one of the items that I mentioned in a rate filing. As far as just concurring with each other, we have discussions about certain things that come in we might have issues with. And we have 1 administrative aide. We perform review of all rate, rule, form, and personal lines filings and all commercial lines form filings. because commercial has been deregulated. We don't bother looking at anything else. We only look at the forms. Last year, staff reviewed approximately 5,600 of these filings. And out of those, there were 300 to 400 of them that are typically rate filings. And usually we end up with maybe 100 that might be homeowners rate reviews. And then the rest of them are auto or other things. Majority of the filings that come in are mostly private passenger automobile. This I put in only because, again, back to the movie Only the Brave, my son hiked up to this when, you know, the first year, like I said, when they were coming home from New Mexico after fighting fires, just to leave the picture with me. And, you know, that's where those 19 young men who fought fire as a living unfortunately succumbed to the fires. And they were trapped within this vegetation, which is just like what we have here in Nevada. So in conclusion, we live in fire-prone areas. Everybody watching is probably very well aware of that from the smoke you've seen and the number of fires. I know I probably didn't mention the Poodle Fire, the Loyalton Fire, but there's so many of them. And California has some 8,000 a year compared to over here in Nevada, which is a few hundred, but they take place quite frequently. Everyone needs to be prepared. Not just firefighters, but us too. And we need to do the work and mitigate the losses before we have anything that occurs. And with that, I am concluding. I will now take any questions.
Great. Let me stop sharing this and get some questions. Okay. Let's see. The first question that we have is from Denise. She says that she has used a Nevada broker to find insurance, and that policy was canceled on her on day 60 after she renewed. They still have not refunded her policy premium. In the Nevada state of Nevada, how long do they have to refund her when a policy is canceled due to fire risk? Her policy, oh, sorry.
Go ahead.
Her policy cost her over $5,200, so the refund is substantial.
It should have been refunded within 30 days after cancellation of a policy.
Okay.
What I would recommend that she do is contact the Division of Insurance Consumer Services. She can do that online or she can call them, but she can file a complaint and they will look into it and find out what's going on and why. And it takes them, usually they give them a 10-day turnaround.
Okay. It looks like somebody had asked, why are fireworks legal? Actually, fireworks are illegal in the state of Nevada, except for in tribal areas. And it's because it's a huge fire hazard. Tim, do you have anything else to add about that?
Not really. I mean, you can drive out to Insurers, you can buy fireworks because that is on tribal land. And, you know, if you cause a fire from it, of course, you're liable. So bad idea, but a lot of people do it here. And I know certain places in California, same thing. So it just depends on the county. It depends on, you know, what is the use for. And again, there's nothing preventing people from taking them off of the tribal land. But if you cause a fire from them or you're caught shooting them, setting them off, you can also be in trouble for that with the law enforcement.
It looks like there is a question for Living with Fire. Sam had said, what is Living with Fire doing with state and federal agencies to reduce the fire danger in public lands, in the mountains, fuel reduction, control burns, and other? Sam, the Living with Fire program focuses on educating Nevadans on how to prepare for wildfire. So we're not really involved in the prevention efforts. We aren't stopping anything, but we're telling Nevadans, we're going to educate you on things like to prepare your home and your property so that you are better able to withstand if a wildfire were to come through. But we do work with state and federal agencies. We offer some defensible space recommendations. I'm sorry, did you say something, Tim?
Yes, just to add to that too, again, what the firefighters do that are hired by like North Lake Tahoe or Zephyr Cove firefighting crews, what they do is before they're ever sent out to fires, it's the first thing they start on every year, and they tend to be doing it for a few months. But what they go out into certain areas and they start cleaning through the forest. They have burn piles, and we've seen them down here in the Carson Valley as well, over in Washoe, up on the hills. They cut down trees, they basically take out dead vegetation, and then they burn it off. Not then, but they burn it off when, of course, the wintertime comes in.
I'm still here. It looks like we just got a few more questions.
Hey, Jamie, before we move on, can I just add something? Christina, who's the director of Living with Fire, she typed a response to Sam. So I just wanted to make sure to read that a little bit, because she's the director of Living with Fire, but she also does work in she has other efforts. So she wrote that she does collaborate on various fuels planning efforts with the BLM, Nevada Division of Forestry, NV Energy, and the Humboldt-Toyabe National Forest. And she can provide expertise and work with partners to help increase education and public understanding of fuels work happening throughout the state. So I just wanted to make sure to read that. And I
Awesome.
will.
Thank you for adding that. I didn't see that.
Oh no, it was kind of just added in the chat.
Let's see. Somebody asked, why is it important for everyone to do the things necessary to be prepared?
Fire can happen from anything. You can have a fire in a mountain that embers can be pushed through, high winds that can drop onto your property within a city. And if you have dry, dead grass, or you have vegetation around you that might, of course, become a flame, you're just as equally exposed as anybody else. And that has happened. Embers can travel for miles. So everybody needs to be prepared and make sure that you've done the mitigation efforts that, again, there's multiple mitigation efforts out there from all fire departments, from Living with Fire, from National Association of Insurance Commissioners, from the National Federation of Firefighters. And, it's not just because you live in the mountains under trees that you might have a fire. It can happen anywhere. And in Nevada, especially with the vegetation we have and the different slopes that we have, wind can be atrocious when a fire comes through. And that's oftentimes when you find that fire becomes its worst, especially is when it's wind driven. These firefighters go out and they might think we're going to be out there for a day or two, and then we get high winds through the area, and all of a sudden the fire goes from 10,000 to 40, 50,000 acres. So it can happen immediately. It can happen in downtown. You just have to watch out and prepare yourself. And I will tell you too, Carson City, because my wife and I did this a few weeks ago, where we live, of course, we're up in the pine trees and things, and I have a lot of sagebrush. Well, I've taken out about an acre of it, and Carson City, I've done this twice now. They have a 20 cubic yard free dumpster that you can ask them to provide. They'll drop it off on Thursday, pick it up on Monday. They have smaller trailers that you can get, and they'll let you dump the vegetation in there, compress it, and you compress it, but they come up and they'll haul it away for free. So it's something that a lot of people, I'd love to see them do, just because one of the worst things you can have is sagebrush all over your property.
Yeah, Tim, Carson City Fire does a great job. But a lot of people aren't from Carson City. And so they would just need to check with their local agency and see what services they offer. Some offer opportunities for a dumpster, or sometimes there's green waste events. But Carson City Fire does a great job. I also have to add, I'm constantly asked this question. I live in the city. What's the chance of me having my home ignite? And why should I be worried? And I tell people, you need to just look at the Coughlin fire there was an example of, like you were saying, it started in the wildland urban interface, and then embers had blown in and hopscotched over some homes and ignited other homes, and it came into the city. So everybody should be prepared.
It hits the roofs and goes up in the eaves.
Mm-hmm. So somebody else had another question. It was Mike. How would a homeowner go about getting a discount for creating defensible space on their property?
Before and after, what I would do is take pictures before, and I would have pictures after, documenting what I've done. If you can't get it from your own company, shop to another company.
Great. There's always so many interesting things that I could pick your brain about. Let me make sure that there's no more questions. Oh, there's a third round of questions. Here's a question. How can I clear the land and trees to mitigate in the national forest? So, so if you have adjacent land that is of, the U.S. Forest Service, you can actually contact them. How about this person, whoever asked this question, how about they email lwf@unr.edu, and we can talk to you about getting a hold of somebody with the U.S. Forest Service. I have had individuals from the U.S. Forest Service tell me, like, hey, if somebody is interested in, property that's adjacent to them and it's U.S. Forest Service land, and there's a fuels issue, we would like to know about it. So whoever asked this question, please email lwf@unr.edu, and we'll get you in contact with the proper person. Second question is from Anne Marie. She says that I've done quite a bit to mitigate the risk of wildfire around my home. I'm still concerned about the cancellation of my homeowner's insurance. What other things can I do to lower the risk of cancellation?
Again, it has to be shopped. You really have to get out there and look through companies. You have to go out with different brokers. There's independent companies. You have, the bigger companies that also write a lot of homeowners policies, but it just has to be shopped because everybody's policy is different. The language, what they look at, what they look for. And in recent years, it's gotten a little stricter, especially in areas where there's been a lot of vegetation, the Tahoe Basin, for instance, and the foothills. So it just depends. And you really have to shop and try to find a policy that you're happy with. And if there's problems, you can't find anything, get a hold of the division. Call the consumer services and try to get some assistance.
Then we're going to try to fit in a few more questions. There's one from Andrew. It says, are there any ways to compel a neighbor to mitigate fire fuel? That one's a difficult one. You can educate them. You can reach out to your local agency. Maybe they can help talk. But there's no law that says that they have to clean up their fire fuel.
True, Jamie, but there's also fire departments that will drive through areas and look to make sure that their things are in compliance. There are, depending upon where you live, okay, there could be local ordinances that could prevent certain things. So whether a property is just a property that could go up in flames very quickly and the fire department sees it, they will ask that it gets removed. So clean it up.
So reach out to your local fire agency.
Yes.
Sandra asked, I'm going to do one more question and then we're done. If anybody else has any other questions, please email lwf@unr.edu. Sandra asked, what about rental insurance?
Here's the thing. Are we talking about rental insurance for the person renting the home or the person, as far as the owner of the home? Or are we talking about the person that's going to be in the home renting it?
It just says, what about rental insurance? So I'm guessing
Okay.
This person is probably renting.
If you're renting, the same thing. Okay. You can shop, rent, what you want covered, your personal property, your liability, any medical expense. You can shop that with different insurers for different rates. If it's an owner, somebody that's renting a property out, it's the same thing. You've just got to shop it and try to find a rate and a company that you're comfortable with and that provides you with a policy that you understand so that you're protected.
And with that, we're going to end. Thank you very much to everybody for attending. Thank you for staying with us as we navigated this technology. And thank you very much, Tim. We really appreciate it. It's always a pleasure working with the Nevada Division of Insurance.
Thank you, Megan. I mean, pardon me, Jamie. I meant to say thank you, Megan and Jamie, both. Okay, I greatly appreciate giving me the opportunity to be here today.
Thanks, Tim.
Thank you.
Appreciate it.
Take care.
And Christine. Okay. Thank you so much. Everyone take care. Bye-bye.
Bye.
And then we have a little survey that's going to pop up, right?
For those of you that are still on, once we leave, there will be a survey that pops up. It is greatly appreciated if you complete this survey. It's also going to be emailed to you in a link. So thank you for attending.